Good morning and welcome to Anoop Singh, Global Head of Shipping Research at Oil Brokerage in Singapore. Anoop, I'm wondering, there's been a lot of reports over the last 24 hours, most notably from the United Kingdom maritime trade operations in terms of kind of official announcements, acknowledging that the level and intensity inside the Gulf are having significant impact on vessels positioning, reporting through automated systems, that basically the GPS of the shippings is being jammed, and in a sense ships are driving blindfolded, and we've had reports now this morning of a collision of two oil tankers off the coast of the UAE in the Indian Ocean outside the Straits of Hormuz. So ultimately, my question to you, Anoop, is could this amount and escalate in time to essentially be a de facto closure of the Straits of Hormuz if shipping becomes so dangerous to the extent in which not the bombs, but the GPS is making it will eventually make it sort of aligned with shipping
Yeah,
requirements.
yeah. So I think there is merit in saying that this is disruptive. I don't think it amounts to a closure, or it is tantamount to something bigger than what it is. Ships are transiting the straits so far, and the collision has happened well outside this area, which is very much in the middle of the GPS jamming story, which is off the port of Bandar Abbas, and therefore very much north of where the collision has happened. Unfortunate timing of the collision, and therefore with all the newsy pieces to it. I think what's the other aspect to look at
So you think
it
that's just a
outside.
coincidence? You think that's just a coincidence, not?
At this stage, I'm inclined to believe it's a coincidence. It's a bad timing. There's no good timing for collision, but this is a timing where it can create mixed signals. Yeah. But I think the other aspect around whether this is as bad as it gets. Your poll was quite instructive, where there's an almost even split at 42-58. Not almost even, but yeah, there's a fair bit of people who think that this has more legs. Yeah. And if you look at, if you're a ship owner, for instance, right, and you're looking at going into the Gulf, if you are a company which is listed on the U.S. stock exchanges, or a Western company, things might look all right now, but could deteriorate very quickly and unexpectedly. So will you get the insurance cover you need if you're trapped in an unfortunate position? So those are the considerations which will also keep ship owners hesitant. And therefore, even if in the immediate 3, 4, 5 days we haven't seen a single drop of oil not being permitted to leave, I don't think you can from here extend that this is the end of the impact on oil markets.
Well, just on the point of the GPS jamming of the ship navigation equipment, is that a familiar sort of impact? I know we've had the dark fleet turning off their GPS in recent years because of the needs to avoid sanctions and so on. On this occasion, is it a sort of a de facto, just a consequence, an unfortunate consequence of so much military activity in the region, that this is just an unintended sort of collateral damage, as the word goes, in more horrific circumstances, or is this a targeted thing to disrupt Iranian oil flows and so forth?
Hard to say why this is happening. Ships can navigate without GPS. It's a coastal water, so with radars, the conventional ways of navigating still exist, so you could still navigate the channel. So there is an alternate. And there's always some element of GPS signal jamming in that part of the world. Every time you have a heightened risk, you have some element of GPS jamming. Why it happens? Well, there could be many reasons. It could be some rogue elements within the establishment. It could be a concerted attempt to limit the abilities of foreign navies, degrade their abilities. That's possible. And there are myriad possibilities. I think limited only by our imagination.
Anoop, just looking at the shipping from the point of view of the elements that do stack up immediately, how does it impact? How does rates, tanker rates, the container rates, the markets react? Where is the insurance and such things? Do they shift at times like this? Does anything come into play? And what's that looking like and the outlook for that?
Yeah. So the impact, if you still want to see an ongoing impact, is still being seen in the freight markets, tanker freight markets. So while the Brent has sort of stabilized in the mid 70s, every passing day is seeing VLCC freight rates rise, MR tanker freight rates rise. So freight rates are reflecting disruption. Yeah, they're reflecting real disruption, and they're reflecting potential disruption, in the weeks ahead as well. It's not just happening within the Gulf. It's also happening in the Eastern Med. For instance, the Haifa refinery has been hit on the eastern coast. So Israel, all else being equal, at some point in time want to get more imports of diesel. And so which ship owners will then be willing to call Israel at that point in time? So again, we're starting to see some stress emerge in the shipping markets in the Eastern Med as well. So, freight markets are still telling us a slightly different story than the oil markets are telling us. Oil markets, as you said, saying nothing to see, let's move on. Freight markets are saying, stop, there is a fair and real disruption, and we are having problems making decisions on how do we position our ships. And therefore, that element, the supply chain, the logistics element, is still very much in place, still very much disrupted. Yeah.
I mean, one of the things we're trying to get a handle on is that where is this? We've seen a 10+% climb in oil prices since a week ago when the US government first announced plans to withdraw non-essential staff from the Gulf, and then obviously the conflict started and we're deep into it. So the fact that no oil supply disrupted yet, is this oil price going to stay elevated because there's a tight market? It's summertime, US demand is up, etc., or will this balloon deflate as the market gets used to this conflict and the reality that no oil is being disrupted, and we'll go back to the sort of $65 handle? How tight is this market from a demand point of view in Asia, and are we seeing that reflected in rates?
From a rate standpoint, this is typically the weakest point of the cycle. We call it the summer lull because ship owners, because of the timing lag, refiners tend to buy early, and by now they are reducing the imports. So we are typically at a seasonal lull for shipping demand, and therefore rates where they are, the strength that they've shown, and even across the curve they've risen on the forward curve. So Q3 is up, Q4 is up, even Cal 26 is up. We would argue Cal 26 has not reflected the level of potential risk that this conflict carries. Now, in terms of how are the oil markets, have they got used to it? It's, even shipping markets and both oil markets are very, very now headline driven, news driven. And a lot will depend on what's the next headline. A lot will depend on, is there some merit to Trump's statement that, Tehran should be evacuated? So what's behind it? Is there something massive coming down the line tonight, tomorrow? Does it mean that, a big air attack or something more targeted at the regime, or regime changes? So there is so much up in the air, that it's hard to really say that everything that can happen is currently priced in. I think there is too much of uncertainty, and therefore prices can only reflect, an average outcome. There will always be people who are who are more right than wrong, and they might be the minority, and they might be the ones who are going long rather than shorting the market there.